All right, guys, what's going on? Just going live right now. When you are arriving and you can hear me, just let me know how the sound is, and then we'll get started. Got a few people in the chat. This is a public one, so give everyone a second. Might have some late arrivals, so before I start off, we'll just give everyone a minute. Gonna keep it super casual. Not gonna do anything too serious. Take questions, chart some alts, maybe talk about Bitcoin. I have a few things that I figured I would actually write down and get to. So things that we can't deny. So significant change in structure, how larger participants are changing their approach. So ultimately, we have to change our approach. Not change our approach, but it should inform our bias. A few things. So let me just make sure that everyone is active in the chat. Pop this out. Pop out chat. Minimize. Okay, everything's good. You can see me in the video, I'm sure. You can see that I haven't gotten a haircut in forever. I have this Surf Bro haircut going on. I got these wings that come out of my hat. That's how I'm rolling right now. I don't see any reason to change. So, cool. Got a bunch of people. Let me say hi to everybody. Captain Youth, let me get that $100. Let me get some manners, buddy. Also, go peep my music. It's a whole vibe. Cool, man. So, DG, what's going on? Ken, what's going on, Ken? Donnie Sounds good. Zebulon, Payne. What's going on? Manuel, Crypto Chick, what's going on? Evan, hey, what a name. Zach Hawkins, what's going on? From Texas. Bango, what's up, buddy? How's it going, man? Tell us about some trades. You know all the trades, man. Ash Fish, good morning. Okay, Marcin, Canadian CEO. All right, cool. All right, so my buddy Dem. So before we get started, I know you guys are gonna roll in, and I'll say hi to you as you come in. I was just saying we're gonna go over some basics, keep it casual. Josh did a video yesterday, and it was kind of a bon voyage because we're both going on vacation. And I thought I was going on vacation today, but I actually, for some reason, I guess I didn't listen to what my wife said. We're leaving tomorrow. So we're leaving tomorrow, so I'll be away. We rented a little house on the beach, so we'll actually be really close to where we live, but I just needed to kind of get away. My wife just got back from vacation, so yeah. So I'll bring my laptop and I'll update the Blockroots Substack and still be active on the community page, but we probably won't be loading a video until I guess until next Friday. Seems reasonable. So yeah, so we'll go over some important things that might be important to touch on because a lot could happen in a week. Again, I said I will update though through the Substack newsletter, which hopefully all of you are subscribed to. It's $9.95 a month, and I don't think that any other newsletter competes with it. We've already returned 10 times over. So if you put $10 into the newsletter, you would have $100 by now. A lot of people are trading with substantially more than that, obviously. But some great ideas, and it's not like, in the newsletter we pick 20 different things and just hope that one of them hits. In each newsletter, for all of these things that are hitting, we're picking like 2 to 3, 4 assets besides Bitcoin and ETH, obviously. So we're doing a really good job in terms of selection, but everything is on the up and up. So it's important to understand that, even as well as we're doing, in this case, it's a rising tide effect. So cool. So go over Bitcoin. If there's any heading to New Jersey Shore, nice. I've been in New Jersey Shore, but the last time I was there, I think was for my cousin's bachelor party, and you know how that goes down there. So, but we're going to a place up here in New York. But the newsletter is not every day, Evan. It's once a week. We do a high time frame analysis that goes out Thursday afternoon, sometimes Wednesday night. It's a high time frame breakdown of everything from spot markets, swap markets, options, futures, every single thing that I think that you should know as far as the macro picture. And then we break down to the lower time frame stuff. And then throughout the week, we will send out sometimes daily updates, sometimes every other day, just kind of ideas and opportunities we think that are popping up. So it's not necessarily every day. Okay. All right. So I could see Quinny answered my question for me. And that being said, if you guys want me to chart any alts right now, leave them in the chat, because what I'll do is I'll take those and we'll make a little playlist. I was gonna say a little what's it called? You know, one of these guys. Yeah, new list. So at some reason the playlist was stuck in my head. Obviously not a playlist. So really quick, so you can see that my BTC chart has a ton of different levels on it, right? Now, I sometimes I lose people when I'm talking about the way that I trade. It's actually not very difficult whatsoever. All I'm doing is basically by observing where price is distributing through time, I'm seeing where value is accruing. I'm seeing where we're having the most significant amount of reactions, how that behavior is distributed through time. So I get a really clear understanding of where the most important levels are. I also take into account where major levels are within just market structure. So not even considering volume, not even considering distribution, but just looking at actual swing points within market structure. If other people are going to use it in crypto, it's really important that you consider it as well, because it's such a technical driven market and it is so self-fulfilling. So if everyone's considering that the weekly time frame swing highs and swing lows are important levels to go by, then it doesn't make sense for you to try to fade everyone else's decision, right? Because their decisions ultimately are going to lead to the way that they position themselves. So the levels that I have listed on the chart, these are what I call my significant reaction zones, or levels where I think that, you know, opportunities might pop up. There's a lot of them, right? So it seems kind of confusing. But you know, for those of you that join Blockroots, the platform, and learn more about market profile and order flow, you realize that this stuff is just like anything else. You know, it looks complex from the outside. Once you get involved and once you start to learn a little bit, you realize that there's really not much to it. It's actually a very simple way to look at the market, right? The important thing is it's not like we're just looking at one particular price. We're taking a bunch of data to see, you know, how price has been distributed through time, right? Where buyers and sellers are most interested, where they're not interested, and so forth. So there's a few things that I want to go over right now, and you guys can leave some of the MTA bag. Me too, man. Me too. Me too with the MTA bag, which is good because today it was going back up. Expect volatility, though, with anything in regards to DeFi. So things we cannot deny. I have a little list that I made because it's important to write things down. Otherwise, I'm really long-winded and I could talk in circles or ellipses. You know, it might take me a long time to get back to my point, actually. So I made a little list, right? Things we cannot deny: significant change in higher time frame structure, larger participants change approach, so you need to change approach too. So first things first, regardless, again, of any kind of drawings that I have on the chart, it's really important that you do inform your decisions around the most common ways, okay? Because again, you're going to be fading a lot more participation when these levels change. So in terms of higher time frame positioning, you know, we know that, for example, that back here, this was the high volume node within the structure. So if we were to look at, we'll just put that on the chart really quick. It's going to pull up the drawings again, which is kind of noisy, but this line right here, extending that forward, that's the point of control of this whole higher time frame range. So this is what we'll do, actually, is we'll go to a different BTC chart so that I don't have this many drawings. That level from that consolidation where we're moving, you know, within a range for, I think it was 98 days or 89 days. That's the point of control. So this level right here, extending that all the way forward, right? So that's the area where more volume was transacted than any other place. That's considered fair value. Price typically returns to that level. That level should act as a reasonable area to expect some type of resistance or support when we're traveling back to it, right? So that was a high volume thick point within that structure. Needless to say, multiple times we revisited it and it did serve as resistance. So this is one of the areas that, no matter what, there's really no debating the level of importance right? Because this was the area where most volume took place. This is not, volume histogram at the bottom of a chart for each candle. This is volume based on this distribution, right? So based on where price spent not most amount of time, but where buyers and sellers, just think about it, transacted the most. So that's a really important level, right? Very important level. Another very important level within that structure is the value area high. So we'll extend that all the way moving forward. Okay, that is also right around the monthly high. So value area high is the high of that distribution. So if we think about a volume profile or a TPO profile, the value areas where, for the most part, you'll see that they'll be set to 70%, but they can be set to 68% as well. This is where 70% of the activity took place. Think about this as when you are looking at a normal Gaussian distribution, 70% of the values will fall within one standard deviation of the average. So, the value area high is the extreme of that value area. The value area low is, the low end of that distribution. Anything outside of that is considered, outside of fair value or further away from fair value in this case, because most fair value point is the point of control. So we're looking at right around 11,500. So these levels have extended themselves moving forward to be very significant. Now, we're looking at this and looking at it with a TPO profile, a volume profile. But if you're looking at a TPO profile, all you're looking at is all of this price action compressed, right? It's a tool that organizes data. So when we look at a profile like this, an individual profile, all these individual profiles are doing is compressing the 30-minute price candles within it. So each individual bar is a 30-minute candle. At the end of that period, we're compressing all of that data to see over that period for a single day session how balanced the market was or how imbalanced it was, right? This gives us some idea as to what the underlying environment is. So, this sets us up for break from balances, right? Ideas of where the market might have gotten a little too imbalanced, all right, where we could expect maybe a correction. There's a whole lot of different ways that we can go about using this type of system, but it's still, it's compressing the underlying structure. So where we spent the most amount of time, you can imagine that that's where price interacted a fair amount, if not the most. So this has been important all the way moving forward. We had a high back here, we had a high back here, and then we have, again, this higher time frame range. Now, we won't get into the specifics of why towards the end of the range. In the beginning of the range, I was talking about this being a great area to short, right? Contextually, good place to define risk because that's right above this level. If it's back above there, the short is invalidated. You want to place a stop as close as possible and give yourself the best contextual risk reward. Now, in terms of why I switched from here moving forward, well, that was because we started to see that the lows are being aggressively sold, but we weren't doing anything to make new lows. So if sellers are continuously coming into the market and selling as much supply as they can, but price is not doing anything to break down, and rather it's actually starting to hold and move slightly upward, well, then we have to assume that maybe the heavier hand in that case is not above us holding us down, but actually is below us supporting us. So I began to establish what I said was strength in microstructure or certain triggers that I was looking to enter trades on behalf of, and 9,300 was a pretty important level for me. It still brought us to the higher time frame resistance that has been important this entire time, right? So back up to this 9,900, 10,000 level, the point of control of the prior structure. Even if you look at the high volume node below that, we're still looking at a general area that has been respected over time. Okay, so things we cannot deny. One thing is that higher time frame structure, you don't have to say it was a specific price point. It doesn't have to be, 9,900, 10,000, 9,800, right? We could refine these levels as we move across this structure, right, to see what has evolved to be more significant, but we still have an idea that the overhead resistance is really strong. So what we can't deny now is that all of that time that we spent battling this out within the range, within that consolidating structure, it resolved upward, and it resolved upward impulsively. So one of the things that we talked about in Blockroots was that the type of breakout we would have from this structure would really dictate how bullish we were. Okay, if we have a resistance and we got a break that looked like this, not that convincing, right? What we want to see is that So, and this gets to another important point. A lot of people talking about volume throughout the structure. Volume is only important to pay attention to when we break a significant level. So when we broke 9.9, when we broke 9.8, 10,000, that level, a ton of volume came in, okay? And the break through that level was incredibly impulsive. We're looking at a daily candle right now, and that level was just smoked. All right, so that should immediately flip our bias, okay? When you see that a level is smoked, and in this case, there's no immediate rejection on the other side of it, so right above this high, there's no immediate rejection whatsoever, that's a sign worth paying attention to. The market it began to choose right down here when we started to see an increase in the normal activity, right? So we had very tight price action, and then we started to expand again. So this is showing us that the market is starting to choose. They're starting to show an imbalance, and sellers at this point are unable to suppress any kind of price action that they were able to suppress earlier. So this level got smoked. It wasn't just a small, meager break through the level. It was a very impulsive break. And what we talked about was if this level broke impulsively, we probably would not get a retest back to these lower levels. All right, we would probably get on the low time frames a very small consolidation. So we look on the 5-minute time frame. We were talking about this over 2 weeks ago. We look on the 5-minute time frame, you look on the 15-minute time frame. I drew this, it was sort of, not a meme, but I drew this image yesterday on Twitter where I said, it might have been yesterday or the day before, things just kind of mold into one now. The retest wouldn't be like this, back to a level. It would be like this, hanging well above the level that it smoked. So you start to see these really low time frame consolidations, and these are the points that you actually just have to consider. Okay, the odds are right now in favor that maybe the trend is changing, or at least it's choosing a direction because of the way that it smoked through this level. So it smokes through the level right here, and then we have this low time frame compression where it's flagging. At this point, whether you're using a volatility stop, a structural stop, you're defining the previous range, right? So you're saying the 9,800 level was the level to smoke. That has been one of the levels more recently that we've refined that has held us back as resistance. If we break through that level and we treat any portion of that that's immediately above it as support, why not just get in the long and define my risk back within the structure? More conservative stop down here, a little bit more conservative stop down here, but still more towards the midpoint of that range, because what you're saying is if the trend falls back within the range, maybe the trend is invalid. Maybe the range is still in play. But right now, I have a lot of evidence that this might lead to continuation. Okay, and it doesn't make sense to not get behind a position like this. All right, so when we change higher time frame structure, the important thing about all of this change right now is that there's really no subjectiveness to where we sit within more recent market structure. Okay, you don't have to be a genius to know that something has changed within here. Okay, we see that this resistance, this higher time frame resistance, we have changed the story. Contextually, we are sitting above all these levels right now. And, while it might have a more decent pullback, okay, the trend should still now be considered as being more weighted to being to the upside than considering that, this is going to be some kind of anomaly and it's going to break down. So we have a significant change in higher time frame structure. And this is important because, while you and I, while even other large traders, they might be trading on the intraday, they might be trading on the lower time frames. If we're sitting on the sidelines and we don't know whether or not we want to trade Bitcoin this entire time, we have a little bit more clarity right now as to maybe what direction the trend is going to take. And if you and I have been on the sidelines and we have not been in crypto, if I look at this chart, this looks like to me a pretty significant what is preceding a pretty significant change. So I might be more inclined to get involved with some type of higher time frame swing position trade. If I'm a larger asset manager and the trend looks like it is, resuming the secular trend upward, at this point there's so many eyes on the chart that for you to say, this is a good short opportunity now, it's just not taking into account all of these details, right? And now contextually, the short is less attractive because the area to define our risk for a long is much more close by, right? So in terms of defining a long, we could say, well, if I'm defining a higher time frame swing trade, and let's say that the trend is changing, a lot of what I'm defining it is based on the fact that this intermediate term trend has changed with regards to this resistance, and now we've broken above it, and I'll put on a swing position with my stop back within this structure, reasonable back at the point of control within this structure, and that's that, right? Put on a position, It's a larger swing trade, and the chart looks good to me. Okay, the stop area for this trade is a lot closer than where the potential target is in this case. Okay, the potential target that we're looking at, could be ultimately, obviously, we had a little bit more of a pullback. So right now, you might want to consider what type of structure would be good for you to enter into position. But we got a pullback where the risk reward already, if we look at it from here, back towards the high of the structure, back towards this high, in terms of risk reward for where this is potentially able to go to, you're looking at already, even if we go to a reasonable target of 12.3, 4-1, right? Even if we're putting it in based on our more recent swing, it's not like it's putting any kind of, it's not like it's showing us anything where risk is greater than reward. So contextually defining our risk based on the way that market structure currently sits, it just favors having a long bias. So larger participants going to change approach. You have to consider that you're probably a very small fish in a big pond, right? Or in this case, a bigger ocean. So in terms of defining higher probability reaction zones above and below, because it's not just smooth sailing. Everyone gets excited. I get excited. If you've been in crypto, I've been in crypto since October 2017. I've ridden every single ebb and flow. We all want this thing to be a nice trend, right? Trends are easy to trade. As long as you don't deny the trend, trends are easy to trade. This is some of the best trading that I've had in crypto in the last week. And it's not to toot my own horn. It's just because, when I recognize that the trend changes, all I do is take high probability setups behind the trend, right? And that's it. I don't try to fade the trend. I don't try to get fancy. I put size behind the trend at that point because there's a high probability it resolves in my favor. Okay, so high probability reaction zones above us. I say high probability, and what that means is that there's a high likelihood that they will act as potential resistance. All right, so we're looking at right now, we're dealing with one on the low time frames. That's just to get accepted back within, what is this gap? Okay, let me just adjust my seating. That is to get accepted back within this gap. I wouldn't say that that is something I would consider right now if I'm looking at swing positions or swing trades. What I would be considering right now is above us. Close this out. We'll go back to the other chart actually. The weekly high closes from 2019. So just going back to the high time frame, back to basics. We're looking at right here. So right around 11,563, which is actually what we're contending with for the last, few days. We see that we came into this level, and this is just your general area right up here, right? This is where price, actually it's a little, the initial high is right. Let me put on the magnet so it attaches to it. The initial high is right here. Okay, so we're looking at 11,474. That is where we initially, rubbed up against after this move up. It's just a weekly swing high. It's another one of those points that the eye is drawn to. Slightly above that is the highest weekly close in 2019. Just to give you an idea that we're sitting, at weekly resistance, at an area that a lot of traders will define their positioning based around. And this is important because, aside from the August 5th swing high, so 2019, I'm looking at this on the other side, above that, there's really not much that goes on. Actually, there's a bit of a shelf in terms of how our volume falls off. So if we look at this chart right here, we got our weekly high closes right there. And then right above that, it just begins to drop off in terms of volume. From 2017 on, you can see we spent most of our time within this value area, and that's between 11.5 and going down to 64.63. So if we break above this level on a weekly closing basis, close above it, have strong price action and acceptance above that level, there's really not a whole lot, and this is not to induce FOMO. There's just not a whole lot that steps in our way. We have 12.5. We have, ultimately we're looking at what is in this case, the high of these structures, okay, where you could expect a decent amount of, zoom out, get rid of this again. So we have those weekly closes, and then when we zoom out, we see that into this gap, we're just looking at the highs of this structure. So ultimately, going all the way up to 3.2, 3.8, it's not like there was a tremendous amount of activity that was transacted above that level. This is looking like it wants to nuke through those levels. So above 11.5 on a weekly closing basis, or even on, above 11.5 on a daily closing basis. We did that once. We were unable to hold that level. If we're able to hold this level now, and we have strong daily closes and strong price action through that level, there's really not a whole lot that sits above us. It's kind of like a hot air pocket. And what you have to imagine is, as price gets to those levels, there might be people that, yes, are going to look to unload that maybe have been underwater. I bet there will be a tremendous kickback at the high. Okay, initially just a massive wick, a great amount of profit taking, but I would expect that above here, there's not a whole lot of people that are going to be sustained selling pressure. Maybe just one-off tapping liquidity above there, but I don't think that there's going to be a lot of people looking to sell within a gap. What you see is that normally the order book kind of vacates at that point. The ask side of the order book becomes very light. And I shared a post today on Twitter about just normal, if we're looking at, for example, something like this, here is just your depth chart on the high time frame showing that there's a lot more passive limits to buy than there are to sell. Okay, and this just extends all the way out to higher prices. This goes down to lower prices. This on its own is going to change a lot. It's going to fluctuate from minute to minute, and it's going to be very confusing. But on the high time frame, we'll see the bullish markets are supported by being more skewed towards having that depth in the bid. And it makes sense because if you consider that if price action was purely, if buying and selling activity was purely stochastic process, meaning that you just threw orders at the book and it was purely random, right? Not sure if it's buying, selling, it doesn't matter. If the order book was skewed to the bid side and there was more bid depth and there was less ask depth, meaning less orders to sell, in a purely stochastic process, the ask would deplete, right? The bid would deplete, but there would be less overall asks if there was less to begin with, and then the book pressure would lead to upward price movement. So you'd be depleting less on the ask side, or rather you'd be depleting the ask side, which was less to begin with, which would lead to overall drift upward anyway. So higher time frame reaction zones to the upside. We're at one right now on a weekly closing basis. In terms of volume, there's not a whole lot up there. It's just psychological resistance above us. Below us, we have 10.5. So 10.5, because what we could see is that this level right down here for 10.438, 10, I think it's 10.8 something on BitMEX, we're just looking right underneath where we currently sit. It is sitting above this structure over here, above these highs, above this high, above this shelf. It is pretty much the extreme uppermost points that were acting as resistance throughout this entire, going on, what was it, almost a year? Who knows now? Going back almost since August 2019. And then with where we currently sit, a little bit more refined on my chart, what that is ultimately after this trending day upward, that level right there is where we had the expansive move begin. Okay, so SPHVN beginning, that's single print high volume node beginning. So single prints that were right here after this expansive move upward. It's just an imbalance, and it usually happens in the direction of a trend. It should act as resistance on the other way down. But you could see that imbalance happened at a significant level because there was a whole lot of activity that occurred into that level as people were aggressively buying at that resistance. So that 10,000 as well. So just ideas of where we could potentially place bids in the case that there's some type of scam wick downward. 10.5 down to 10,000. Anywhere down there is reasonable to expect that if price returns to that level, there's really no reason to be too alarmed. So if we come down into 9.9 even, it's not something that would really alarm me, because all it is it would be doing at that point what is expected of major levels being broken is that they get retested. That would take more time. More often than not, a bull market happens very fast, and you don't get these technical, theoretical pullbacks or pullbacks that happen, technical pullbacks that happen mostly in theory, but when a bull market occurs, you don't really get to buy, the break as clean as you would expect, or the retest. It all happens so fast. So 10,005 to 10,000. Now there is a level below us. It's only significant because people attribute significance to it. It's the CME gap at 9625. I wouldn't really worry too much about it, but if it did get visited, it still leaves us with a bullish structure. So obviously we'll value it as if price moves lower. In terms of judging the trend, right? There are, in a trending environment, you trade differently. You trend how you would trade a trend, which is using some trend-based tool, or rather it is to your benefit to use the trend-based tool because it gives you sort of an idea of how strong or weak the trend is. So we have, just referring right now to this, so we have moving averages. Those are basic, right? These are lagging derivatives of price. All we're seeing is over what rolling period, depending on what your setting is, the average price for that period. So I have a 9 and a 20 on right now. A 9, all right, so a 9 is good for a faster moving trend. You'll see a lot of people use a 9 during a fast moving trend on the daily. The initial pullback at that area should be a high reaction zone, meaning you could expect a buying activity at that level. Remember, when you switch the period, it's going to change the period in which the moving average is applied to. So if you have the daily 20, it's the 20 moving average based on 20 days. If you have the 20 on a 4-hour, it's based on a 4-hour chart. It's not the daily 20 anymore. So what we see is that on a trend, or rather in a strong trend, the 20 period moving average is a good idea of sort of who's in control. You're above the 20 period moving average, buyers in control. This is typically a pretty good area to buy a retest, buy a pullback if we get a pullback to the 20 period. Now remember that when you're far extended from the 20, what we'll see is that price will revert back to the 20. Okay, it gives you an idea how strong the trend is, how far extended we are. But remember, reversion back to the 20 period moving average doesn't actually need to mean that price moves down. All it has to mean is that price moves sideways, because all it is an average of that price movement. And actually, if price moves sideways long enough, all moving averages would converge with price. So price moves sideways enough and the moving average catches up. That's more often than not a good buying opportunity during strong trends. Again, just as a reminder, these things in theory, every new trend for Bitcoin is something completely different. So moving averages, VWAP, very useful. I use VWAP on my charts. So if we look at this chart right here, I have a 3-day VWAP, a 1-day VWAP. This is volume weighted average price. So think about this as the fair value price, all right, over that day period. So if we're looking at a day, we're looking at a week, what it's showing us is the fair value price. So I have the daily on. For short-term trading, this will show me, where fair value is, where buyers and sellers put on risk. So that is the daily right there. So when we're sitting above the daily on the low time frames, it shows that buyers are in control, right? That is fair value. That is where most activity occurred. If you consider just neutrality and that the activity between buyers and sellers, even if it was equal and it was below you, that would mean that longs are in better position, right? Because whatever was transacted, if we're above where that occurred, longs are in better position than shorts. And the inverse could be said if we're below that. But we could use this for a higher time frame. So we could look at something like the weekly, previous day VWAP. And again, this is just an anchoring point from the weekly or from a previous day. Shows us over that period where fair value is. Are we above it? Are we below it? We're currently sitting above the weekly VWAP. We're currently sitting above the previous day VWAP. This is showing us that buyers are in control with this trend. These are also good areas to buy. If we return to them, we see that they act as dynamic support or resistance. In a bearish trend, the opposite. When we revisit them from the underside, they act as resistance. So then we have standard deviation bands, your Bollinger Bands. I think you guys know what these are. Shows you how far extended you are from the 20 period moving average. You have your 1 standard deviation band, 2 standard deviation band. It's just a 20 period moving average with a band on the outside of it. And then, my more complicated things that are not complicated at all, the TPO chart. When I see that value has begun to overlap, so in a trend, you'll typically have value that is this white area, meaning that's where 70% of the volume and activity occurred. My volume is listed by these black brackets, and you can see them, but I'm going to refer to them sort of as if it's 1 right now, just for the sake of simplicity. In a trend, these will be migrating upward or downward if it's a downtrend. In a range, will be overlapping. So value will be accruing or being distributed through a range, right? When the trend begins to pick up again, we'll see this value overlap, or rather migration begin to occur. So value will move outside of range it's been confined within. These are good tools. Delta, so in a really strong trend, you'll see the buying activity. These are things that we go over in Blockroots. I don't want to get too much into it because that is something that we cover in Blockroots pretty much ad nauseum. The last thing I want to cover before we head to some questions or anything with regards to charting any of the assets, low time frame flags. So in this type of environment, you're not going to get, again, these pullbacks that happen in theory that are really clean, that they come and retest the level perfectly. You might get a scam wick. But a lot of the time it's going to be very fast moving. So when we get the next impulsive move to the upside, thumbs up that we do, it's going to look like this again. It's not going to be a higher time frame pullback like this. This is pretty much signifying exhaustion, and we're going to have some type of correction. This is what's going to happen during a trend. If you want to participate in this, there are a few ways you could go about it, right? This looks like, I draw this and it's a meme all the time. All it looks like is this. On the low time frames, on a 5-minute chart, a 3-minute chart, a 10-minute chart, what I do is I'll typically, if I'm not going to get aggressive and buy the retest of the small microstructural low and place a stop right outside of here, what I'll do is I'll buy the breakout, place my stop right here, and in this case, I'm expecting continuation. I'll put a trailing stop on. So if we're taking advantage of low time frame breakouts, let's talk about the weekly that's coming up. And I say coming up as if it's going to happen, but hopefully, fingers crossed, we get continued price action to the upside. Let's say we get a big candle to the upside. So we get a big break to the upside. It's impulsive. You can't really take advantage of it through the level. Maybe you market by the level, fine. Maybe you're a bit more aggressive like that. Let's say we get the candle break to 1200, 12,000. Hopefully never 1200 again, right? So 12,000. So we get a break to 12,000, and above 12,000 we get something that, here's 12. We get something that looks like this. Nukes the level, starts consolidating right here. Okay, go ahead, place your orders down here, place some limits down there. Maybe you'll get a scam wick, but a lot of the times you'll see that this consolidation is the move pre-break. So what I do is I will buy into this consolidation either during the break or, in anticipation of the break, but still place my stop within this, below this structure. Okay, I would say, if you're looking at a 30-minute chart, give price one 30-minute ATR outside of that, meaning look at an ATR chart. So go to Trading View. So we'll go to the 30-minute chart, pull up the ATR, which is the average true range of price movement, what is to be expected over that period. So we'll go to ATR, and you'll see that the ATR is, in this case, we're at $65. So let's just say in this example, the ATR was $60. You break above the level. Here is a range of price movement that's maybe $80, $60, $100, very tight range, right? Micro range after a major move through a level. I would place my stop one ATR outside of the low. So $60 below here, anticipation of the break or during the break. And in this case, what you can do is, let's say that this is at 12 and the next significant level is at 12.3. Now, these trends are very strong. So I've made the mistake, even just through repetition and not paying attention to, minor detail, the trend is really strong and it's to the upside right now. Place take profits fully at levels. I wouldn't place full TPs at levels. What I would do is, if you're on Phemex or on any kind of platform that allows the conditional orders, Phemex has these very simple. It has a triggered trailing stop. Let's say that in this case, we see the low time frame breakout, and we're just going to pull up this chart. So go to the daily. So we have the low time frame breakout through 12. All right, and then the next target is, let's say 12.3. That's below us. Come on. So let's say the next target is right around, that's not it. 12.3 is right up here. So let's say our next target is 12.3. We break this level right here, and we're getting that low time frame consolidation, flagging behavior. We have our stop one ATR below the low. So in this case, let's say $65. The target is at 12.3 up here. This is a really strong trend. The probability it looks like 12.30. The probability is that in an environment like this, 12.3, that there could be a lot of overthrow, right? So you could take profit at 12.3 with a take profit. You had your stop, you're out of the trade, that's great. But then what you notice is that in a trend like this, price continues to run beyond your take profit. And, if you're in spot, that's great. You get out of your derivative contract trade, you're still exposed to spot. But, you want to be able to take advantage of strength, right, and potential overthrow. So exchanges have allowed us to take advantage of this. It's not like they have allowed us, because they don't want you to, exchanges are the house. Not to say that they don't want you to win, but they enable us to use these tools such as triggered trailing stops. So let's say that my triggered trailing stop is right here, and I have it triggered for 12.3, and maybe I'll put an ATR away from this to follow it. So when price hits 12.3, I will put one ATR of $60, $65 as the trailing value. That means that when price comes into my stop, into my triggered trailing profit, okay, it triggers that order that is now $65 below as a trailing stop. If price just blows through this level, which it clearly can in a really strong trend, my stop is dragged up with it by a value of $65 or 1 ATR. This allows to have this for me to capture this overthrow. Now, price can walk into a level at this point and just completely nuke down, at which point my trailing stop has not continued to follow up. My trailing stop only goes up. As price is going up, it stays going up. The moment price stops moving upward, my trailing stop anchors by that value. So this is something to consider, because in this type of environment, you're going to have, the high probability is that what? That any moves to the upside are going to have overthrow, and that corrective moves to the downside are going to be less, are going to be more shallow, right? So that's why people anticipate that they're going to get a pullback to a level, and what they realize is they're getting front run because everyone's looking to buy the new level, right? Or everyone's looking to buy the pullback. Price doesn't pull all the way back to the 0.5 fib or the 0.318. It pulls, just above that, right? So trailing triggered stops, a very useful tool. Let's see what if you guys have any questions right now. I don't know how long we've been going for, but where we sit right now, there's no reason to be bearish. Price is going to correct at some point. This major correction is going to be a liquidation structure because there's a lot of leverage in the system. And you have a lot of people that are trying to take advantage of this through the leveraged products. Okay. Let's see. Oh, thanks, Donnie. So most of all of the basic stuff is up on the course. Now I'm just iterating, and I'll be adding stuff every week as far as ideas and, things that you need to consider. So I'm headed to New Jersey Shore. Yeah, I got through there. There we go. Cool. MTA, I just want to look at that real quick. So MTA, in the newsletter, I said 508. It broke below 508, unfortunately. Looking at a chart on something like this is sometimes not even that useful because it's still in price discovery. It's not really on major exchanges. It's on FTX, but you just want to see that the underlying behavior that is normally indicative of strength is there. In terms of a bullish looking chart, I wouldn't focus too much on levels within this. I would say that it's good that it's back above this 508 because that is the daily close, one of the daily high closes within this trend. So it is something that I'm bullish on. Not necessarily, I wouldn't necessarily worry too much about the chart for this. Let's see, for BTC. Yeah, my hair is long, banger. Question about single prints, where we are now. How can I see when there is acceptance on a single prints area or not? Now I use 3 TPO or more is acceptance. So the basic idea, the most basic application of acceptance with TPO is 2 TPOs. The problem with this is that it's just confirmation, right? It's a higher time frame confirmation. It requires that you wait for at least a half-hour period through a location. A lot can happen in the next 5 minutes after that, right? Price can completely nuke upward or rocket upward, and even though it would look good in hindsight that you saw that, there were 2 TPOs, in actuality, when you were trading it during that moment, you were never able to take advantage of it because it didn't really pan out like that, right? It happened all at once. Same way that people use higher time frame candle closes through levels. It looks great in hindsight a lot of the time, but on the low time frame, that 1 4-hour candle didn't take 4 hours to move through the level. Slowly, like a trolley allowing everyone to board to the destination, it began as a 4-hour candle. It moved the entire length of the 4-hour candle in the first 5 minutes, and then maintained that level. So you never really got to participate based on that 4-hour close, right? It didn't give you the perfect pullback or any of that. So in terms of acceptance, what you want to see is relative volume pickup. So let's look at the TPO chart real quick. So what you want to see in terms of acceptance is relative volume pickup. So what I'm using right now is, this is the single print level. I'm pointing as if you guys are, right here. This is the single print level right here. So right at 11,249. This is holding the high volume value, the value area high of the structure. So good sign right there. Holding that, was sold bullishly. sold bullishly, meaning it was sold and it was absorbed. In terms of acceptance into this single print, let's look at CVD really quick. So that was actually on the other chart. No real signs of absorption at the high yet. Acceptance is when we have activity pick up into that level. All right, so what chart are we looking at right now? This is a volume chart, so we'll go back to that because it actually changed now. So what time is it? Just want to get my bearings. Okay, here we go. This is where, oh, it was right here. I thought I was back in time, or too forward or whatever. So with acceptance, think about what acceptance means. So back that single print, this level, where are we? You can do it. Okay, this level right here, what that indicates is that there was no real two-way activity, right? There was not a whole lot of trade. It's an imbalance, one-sided, no two-way activity, right? Just put it that way. There's no, back and forth trading between two parties. It's just one-sided, right? It's not just one party, but it's one-sided, right? It's an imbalance. Acceptance into this level, we'd be using this level as sort of a barometer for what activity is, right? There was no activity previously. What you want to see in that level is that volume begins to pick up. So relative volume. So if you look at the activity leading up to this break. So now you can look at a standard time chart. So we can go to, for example, this is a 5 million, but we could go to a 5-minute chart. First thing you want to see is when you gain acceptance above that level, so 11,249, that the level is being sold and held. We did have it sold right there, held, but had no follow through. We're still seeing sellers come in. Sellers coming in. The level is holding, right? Again, more sellers trapped below the low, reclaiming the low. This is all bullish. This is good. We have a pickup in volume, all right? So we're looking at the activity above, relative volume up to this point. In this case, relative volume, we're looking at, this is going back. Relative volume is in, the low 2s, 3s. At the major spill points, we're seeing that it's, above 10 in the teens. There's not a whole lot of volume pickup yet, so it's not showing that it's completely accepted, but it is being sold and it is, again, back above. We need to see with acceptance that volume comes back in. So what we're looking at over the course of this structure, let me go to the 15 because now I'm noticing when I go to the time I have to scroll a lot further back because I was using a non-time based periodicity. So what we see above this level is that volume did pick up, right? So initial move above, so focus on this move up. All right, okay, volume picked up, 57 million contracts, 44 million contracts, but you have a good amount of selling above there. Someone passively absorbed it. That means that the book was able to walk up there and capture all that activity. But again, break down, pulling back above that level, and we're not really seeing volume really pick up. So this first move into this single print zone, you have high volume pickup, right? 57, 48, 44, good amount of activity. Moving back above this level, if we're able to hold it and see volume start to come back in, or just hold it, period, right? If we're able to gain acceptance back into here, so 11,460, and we don't see that there's the same kickback that there was, that's a good sign, right? You don't have to necessarily wait for the volume to come in. It probably will come in. What I will also do is look at a volume-based chart. So we could go to something like a volume-based periodicity, and what this is going to do is it's actually going to print candles based on the volume coming in. So as soon as I start to see that we're printing a ton of activity above this level, that shows me that more volume is coming in because each one of these candles now is 5 million contracts. So you could do this, right? This is just one way to do it. And you can see that as we go back to that last period where we had a ton of activity, there was a lot more candles that were printed because there was a lot more volume. So acceptance means that buyers and sellers are willing to do business at that level. So you start to see more buying come in, less selling where there was selling, and more volume start to come in as well. Okay. Just tune in. Blockroots is bullish in trending environments like this. Do you have a bottom fishing bids? Yeah, so I'll put these, lottery bids at the lows. I'll put lottery bids at the lows just in case we get some type of scam wick down. Okay, so just tuned in. Blockroots is bullish. Well, we've been bullish since the break of 9.3 back in the range. So we laid out a pretty pretty defined course of action if we started changing from here. So we'll go all the way back to that. So we flipped bullish back here. All right, so right over here is actually right around 9.4. When we had the change in microstructure, well, I say 9.3 because for me it was, this was all, public. We said this on Twitter. When we started flipping microstructure, I started becoming bullish. Okay, this was heavily sold, and instead it kept moving slightly upward. Flipping microstructure, it might not satisfy the criteria for higher time frame structural based traders, but that sort of requirement for higher time frame structure to be printed before you get in the trend leaves you behind a lot of the move. So what you want to do is obviously become proficient at spotting the signs that the end result is going to occur either way, because no matter what, the activity that occurs on the high time frame is ultimately printed and preceded by low time frame activity as well. So every higher high begins as a higher low in progress, right? Or a higher high in progress. It's on its way there. So you have to look for the signs that it is. And there are a bunch of signs within the higher time frame delta, and in this case, lower time frame market structure that was plenty enough for us to get bullish. So yeah, we've been bullish since 93, and we're bullish as long as the trend structure stays intact. It doesn't make sense not to be. Okay. So let's see. Go back to some stuff. I see you are a Python coder. Any chance for a tutorial on programming? I'm not a Python coder. I have completed 2 and a half courses in Python. 2 of them on Udemy. So one on a complete Python bootcamp, and then the second one on Python for algorithmic trading and finance. So Pandas, NumPy, Matplot, all of that. And then I say 2 and a half because I originally, Trader XO, a buddy, had recommended that I do, what's it called? Did I just say it? Did I just say it and completely forget it again? What was it called? I feel like maybe I didn't just say it. I'm completely losing my mind. It's another platform that is really popular for coding. Oh, I'll just look at it in my bookmarks. Okay, where is it? Did I not save it? What was it? I can't think of what it was. I'd have to look through my DMs with Trader XO, but I don't want to blow up our DMs. Shoot. It's another really popular coding website. I feel like I just said it, but I literally just forgot it. That's what happens when you get old. I've been taking my multivitamins, though, so my Joe Rogan On It Aubrey Marcus multivitamins, the total human package. So I'll find out what that is, but I wouldn't say that I am a Python coder. I have a very surface level understanding of Python still. It's a matter of like spending a large amount of your time dedicating it to that, and I haven't had the time to dedicate myself to much other than the market. So it's just, one, you borrow from one, you sacrifice from one to benefit the other. So I'll get back into it when I have a little bit more time. What is that website? What is that website? I want to look on, you know what I'll do, guys? I want to find this out right now so that you can, so I'll just bring my DMs to the other screen, Trader XO. Of course, my recent search for DMs is not pulling it up. Pluralsight, never mind. Okay. So Pluralsight is another really good platform that I used as well. So Pluralsight. It's almost like, brain is very fascinating. All your memories and all that, it's all connected like sort of like a branch within a network. And as soon as you start to go down one of those branches, it sort of like lights up the rest of it. And you know how when you're trying to remember something, all you need to do is sort of put yourself in that frame where you last thought about that or what you were last doing, and it just kind of lights up the entire thing. So let's see. So even though I'm older, my synapses are still firing. Okay, so can you show how you got the $60, $65 on ATR again? So what I was doing was using it on the 30-minute chart. So all you do is just go to indicators, type in average true range, ATR, and then I'm on the wrong charting platform. And then what you'll see is, I'll take the funding indicator off, it pulls this up, and it's going to show us the average true range based on what period setting you're using. So if you use the daily, and this is one of the reasons why we started getting into this trend down here, is because our movement on the daily time frame started going beyond what the average true range of price movement was for the period of time that preceded it. So think about the idea of calculating what norms are. So norms, baseline, reference points, right? Anchoring points. And then when you see that values are well above those that are coming into the market, you know, okay, well, something's different, right? And normally volatility, volume, these are things that signify difference. So when you have things that are 1 standard deviation, 2 standard deviation away from these, it's time to start paying attention at least, right? So the ATR on the 30-minute takes the 30-minute candle ATR. So it shows us, and I say 30-minute because this is what we go over when we're looking at TPO. We look at the average sub-period rotation size. That means the average 30-minute candle high-low range. So we have an idea of when things are compressed, when it's low, when things are impulsive, when it's high. Again, idea of establishing norms. So what we're looking at is the 30-minute ATR, which is right around 60, you know, give or take. And that is kind of what's to be expected, right? Over this period, average is 60. Now, an average is an average, right? It's not a trim mean. If you wanted to find the trimmed mean, you'd have to find the, what is it, the interquartile range, Q1 minus, I forgot the actual statistics formula. If I haven't been in college in a long time, but you need to find the interquartile range to find the, you know, the outliers, to find the trim mean to see where most of that distribution occurs. But it's, you know, it's a fair idea of what the average is, right? Obviously, there are going to be outliers where you'll have these large moves, but everything kind of reverts back to the mean. So let's see. Good evening from Cape Town. What's up, Dr. Luke? How's it going? Cape Town, a place that I want to visit really bad. Amazing time to be in crypto. It is. We're finally starting to get, you know, rewarded for putting in all that time when things were just boring. You have to be in the market in crypto for the periods of time when things start moving. I think it's something like 20 or 30 days of the year crypto makes all, you know, puts in 90% of its movement. Sort of like the Pareto principle, right? 80% of the results come from, you know, 20% of the days throughout the year. So if you're not in it, if you're a trader and you're not in the market, you could miss out on everything by just being absent. Thoughts on what can happen if BTC goes up like it did last week? Will we see similar alt market we saw? So in terms of alt market, we've had a tremendous version of alt season, right? They're all going to be different. The market is still very new. I think that alts go crazy when Bitcoin puts in another all-time high. After Bitcoin, you know, finds its balance again. After it puts in an all-time high, when it puts in an all-time high, if it puts in an all-time high, obviously, you know, reminder that nothing is certain, but we think there's a high probability that it will, right? When? Who knows? It could be 2021. We could go up to 15 and form another range, or 13 and form another range, right? It always seems like it's going to occur faster, but the secular trend is up. After that, I think it pulls a lot of retail investment from outside of the market that has never been involved because they think, I want to be part of this. They come in, they go to Coinbase, they go to their fiat exchange, and they see things that are cheap relative to really expensive Bitcoin at that time, and all they think is that they're future Bitcoins potentially. Right now, alts are, you know, when Bitcoin moved up, alts suffered because there is sometimes that negative or inverse correlation. When Bitcoin performs well, we see this fleet equality because people don't have enough exposure to Bitcoin at that moment and they need to get into Bitcoin because Bitcoin's moving. It's a fleet equality effect. I think that it could happen again. So alts right now, they're a riskier play because of that. We have to take into consideration all these, you know, dynamics between the relationship between Bitcoin and alts. When there's an inverse relationship, when there's a positive relationship, when let's say Bitcoin is drifting upward and then alts can appreciate or have time to sort of do their own thing. Then there's a positive correlation when Bitcoin absolutely, you know, dumps and then altcoins dump. So it's an interesting dynamic to pay attention to. What do you think of SXP? I am in SXP. So I'm in SXP. I got back into it after I got out last week. So let's take a look at SXP. I think that SXP, SQ, there's another one too. So I think that this, in terms of the higher time frame structure, let's go to the daily. I think this is looking good. This is price discovery, right? This is brand new. So, you know, you could have been back in 2018 with Link, not with Link. Well, with Link, you could have done this the entire time, right? But with Zill, so Zilliqa, Ravencoin, you could have seen these structures that they printed earlier on when they first put in their 100, 200% moves and thought, well, that's a lot, right? It's not going to continue to go up. But they went on to put in 6, 7, 800% upward. This on the daily is all we really have. This looks strong to me, right? This is your swing low in the daily. This is a daily range that we were stuck within. Had an impulsive move out, lost the level, now reclaimed it, right? Engulfing almost, right? If you consider engulfing from high to low, close, excuse me, from open to close. So now we're back above. I think the most important level is at 14,799 sat level. So above there, and I'm bullish. It's going to move a lot. It's an altcoin. It's going to, you know, it's going to, I was going to say shuffle and jive. I don't even know what I was going to say. I was going to say shive. It's going to shuffle around a lot because it's an altcoin. It's illiquid. It's, you know, it's very loose. As long as it doesn't really lose that level with conviction, I'm completely fine to hold on to this for some time. I consider alts more like investments with no real investment thesis. So like investments, but more gambling investments than anything. I'm just going to forget about it. If it doesn't lose the level, that's fine. It can move sideways for months. But I've only allocated a certain amount of money to it, so it's okay. Right. ATR is different from period to period, so which one do we use? For low time frame ATR, if I'm looking at lower time frame trends, I apply a low time frame ATR. So if I'm looking at a 30-minute trend in process, I'm looking at a 30-minute ATR. A 30-minute ATR is just a safe ATR to use for lower time frame trading. Black Betty. Black Betty with the sarcasm. Woo-woo, cryptocurrency for life. Cryptocurrency for life. Decentralization is the best thing in the world. Ledgers and blockchains and forks. Amazing stuff. BTC is the future. Yeah. Good stuff, Black Betty. I hate the government. I'm selling my house and buying Bitcoin. I'm not going to pay interest again. Yeah, man. You know what? It is what it is. It's the system we live in. I pay an exorbitant amount of money in taxes a year. It makes me pretty fucking sick. But it is what it is, right? What are you going to do? Move to Mars? Maybe. Call up Elon. Or what am I going to do? Move to, I'd leave my family. I love where I live. You could go to like states in the United States that are, you know, lenient as far as taxes go. With regards to Blockroots, is it possible to add a percentage portfolio of the holds that are suggested? No, I can't. We're not going to give, you know, specific allocations to portfolio positions or anything like that. We don't give advice or anything specific like that. We're just, you know, going over our ideas about the market, basic educational stuff that is not, you know, I don't have to worry about telling you to do something and then you get in trouble and liquidate yourself because it's a gamble, you know. So if that's what you meant, no, we're not going to do that. I'd be very upfront as far as being clear on that. What we do is give you the education so you hopefully can discern whether or not something is showing clear signs of strength, clear signs of weakness. Yeah. Don't get too excited, Betty. You never know what's going to happen. Don't pay him, bro. F that. Only pay for tax if the government comes with a big stick. Even then, lie. Well, Anurag, you know, to each their own. So, any alts that you guys want to talk about or anything else you guys want to talk about? We're about almost an hour into this. Good stream. COVID numbers are really dropping now. Easier for MDs. So one of the days you can fly in and come visit. Hell yeah, man. I was saying my aunt goes to South Africa a lot to do government work. So she was at the Pentagon for 20 years. I don't know if she still does. She works for the Department of Justice now, but she was in Cape Town once a year and says it was her favorite place in the world. So go figure. And I've seen pictures. It's just insane, beautiful. Fapcoin, DMG, Quark, SNX. I think that was what I was trying to think of before. So, all right, SNX, Bitcoin. So these are the first movers, right? SNX was one of the first movers. SXP, I think that these are still going to go on to put on good numbers over the next few months, as long as Bitcoin and everything is still on the up and up. If you just look at this from in terms of our weekly trend, right? So weekly closing basis, it's how I treat alts, very structural, clean based, no fanciness whatsoever. So highest weekly close, most recent high before that. Looking at this on the daily, kind of pinned between a rock and a hard place, right? But what we are doing on the low time frames now within the last few days is putting in this very clear upward trend. So in my opinion, as long as we're still showing signs of strength above this 3582 level, which is, if we go back, that is the weekly swing high right before this most recent one, consider that this could be still a trend in progress on the weekly. So on the weekly, all it is doing this, right? So that is still an uptrend on the weekly. It's just there's nothing to it because it's brand new. As long as we maintain 3582, I would say that there's no real reason to consider this one counted out, right? Look at this versus USD. It's appreciating more against USD, right? Because obviously against Bitcoin, it's valued against Bitcoin. So Bitcoin has outperformed in the last few days. USD chart, though, you have to imagine there's a lot of on-ramps now with USDT, whereas 2017, 18, it was more through BTC or previously before all of this. So this chart is looking strong. It's still looking strong by all means. Can you please explain the correlation of alts for BCC? So I think I just went over that. I can't get too deep into that. But there is sometimes an inverse correlation. When Bitcoin performs really well, alts dump because people are overexposed to alts and they have to flee out of their alt positions to get exposure to BTC. We see liquidity dry up and market moves very quickly for alts to the downside. When BTC is stable, we see that alts have a kind of permission to move upward, right? Market is stable, everything's calm. And then when BTC is dropping violently, sometimes you'll have some alts that will outperform, but for the most part, the entire market moves down. So COVID dropping where? I'm from Brazil. Yeah, all different parts of the world, Marcelo, are experiencing different phases of this, right? So Ethereum, do you hold EWT? No, I don't. No, right now I only hold, just to give an updated idea of what my portfolio is, I hold, we just went over one, SXP, I hold MTA, I hold BTC, I hold ETH, I hold FIO. Thinking, is there one that I'm missing? I hold another one called Karma. This is a private group on Telegram that has a token that if you own the 200 Karma, you're able to, bot gives you access to this group. A bunch of people that are big in crypto are in it. Sam, the creator of FTX, is in it. There's only 200 of us in the group. I think 230 now. It's a very private group, but I hold some Karma. And then I also hold, I think that's it. I don't hold EWT. If I forgot one, I'll update it because it's odd for me to hold multiple things. 2017 and 2018 I did, but recently I haven't. We look at ETH. ETH is leading everything right now. So on the against USD, everything's just, it's crushing it. It's ETH, our target for ETH was 375 above 307, with 400 being reasonable right after that. Right, just 375 as maybe an area to potentially place your target, your triggered trailing stop. But this is just absolutely an uptrend by all standards, right? On the monthly now, on the weekly, secular trend in the history of this asset. Still, it's not a new uptrend, but it only starts one way, right? It starts on this time frame. The trend change starts. So then we'll go to ETH BTC, give us an idea of, it's outperforming BTC. I know that already. So ETH against BTC, it's outperforming. The basic play with us, we teach this in Blockroots, with all alts, is you regain a previous, so your first area of business after losing a major level, major support, major support, major support, this whole general area. First order of business after losing that level, the resistance is going to be that level. You gain acceptance on that, above that, through that, on the daily, for me, on the daily. The weekly chart on the daily, the weekly level on the daily chart. Signs of strength above that, and I get long. So ETH is satisfying all of that criteria. As far as evidence goes, there's evidence that it's clearly in a very strong uptrend. Now, mind you, these are going to correct at some point. They're going to put in very scary corrections. Bitcoin did. Who knows? It could do it again. You never really know. You do know that in bull trends, in bull markets, that they last a very short amount of time, but they scare the shit out of you, right? Because they drop 10, 12, 13%, 20%. As more leverage products come in and the market has more leverage built into it, this will just be more of an occurrence. That's why there's so many times when, if you're micromanaging a position, a lot of the times you'll look back on a position, maybe you exited, and you'll think, well, damn, if I just wasn't paying attention to the chart, I wouldn't have pulled myself out, because that was just kind of a blip. COVID drop, okay. Katon, no, I didn't cover Katon. I don't think we could really cover Katon. Is there a chart for Katon? There is, actually. Cool. So Katon, this was a trade that Josh shared that was an ARB opportunity because of the fair value that this should be, which is essentially, I think 10,000 ring is supposed to equal 1 Katon. So at the time, 10,000 ring meant 300 Katon. Or $300 Katon. So the idea is that this spread would close, not 100%, but I think that these Katon, MTA, Wi-Fi, I think that these all are going to continue to do well. They're the new assets. They're the new ICOs, right? It's not over. Trust me. I don't want to say trust me. I take that back. I think with a high level of confidence that it's just beginning. There'll be shakeouts, there'll be all of that, but I think on a longer term chart, a year from now, that we'll see major, that some of these were just, that will be very hard to see without a log chart. And you know what that could mean. That could mean this is twice the value, 3 times the value. The point is that I think that these all are going to be experiencing upside price action. Not all the ridiculous stuff on Uniswap, but hey, Dogecoin was a meme. Tendies is a meme, but Dogecoin made some people millionaires, right? So Katon, again, same idea with MTA and all the rest. The chart, the resistance here, if we just look at high time frame resistance up there, weekly is nothing really to the weekly, right? I wouldn't even say that this is really that significant because this is so new. But we could label this anyway. So weekly level, why aren't you labeling? Oh, I have to go beyond it. Okay, so right around there. And then right now on the low time frame, beginning to see a shift. But you know, higher lows in a low time frame would be good. So you could start to see that we were going from this behavior to maybe changing that on the way up right here. You know, I think that Katon goes back up to 90, right around there. Don't see why it's not gonna. If I can't chart it like Trust Swap or XIO, let's say Trust Swap. Just because, let's say Trust Swap. Oh, I could chart it. Never mind. Poloniex. Oh, it's a new chart. Oh, that's an ugly chart. Let me see if. Huh. Whoa. I don't know where you would chart this, so I don't know anything about this, Dr. Luke. Trust Swap. Tether. I'm just trying to put all of them on the chart to see if there's anything. I don't know anything about Trust Swap. I don't think I could really chart it. Let's look at Trust Swap. Swap coin or token, whatever. CoinGecko. Let's just take a look at this. Market cap 18 million, pretty low, right? Trading volume 2 million, decent, but that's across all the exchanges that it's on, which are oh, it's on Uniswap. Okay, Hotbit, BitMax. Oh, it's on. Okay, so it's on BitMax. 1 second. Let me check something real quick. Whoa. Let me reset that. Okay. Just looking for uno momento. Pull up a BitMax chart. But I have my BitMax. I don't want to have all my personal data exposed. So digital asset platform. I'm going to sign out of that. Log out. Okay. Now trading, professional. Okay, now we will gladly put this on the chart. And let's see, trust swap. What is the symbol for that? Because I just saw it on CoinGecko. Swap, okay. BTC, okay, there we go. All right, swap. Daily chart, let's go to that. Daily high is right there. Let's mark that off. Daily closing high right there. Swing point down here. So a little bit of a range between there. Nothing significant. I hate to even call it that. Making higher lows, right? Low, higher low. Looks like this was maybe just a illiquid wick, but on the way up, the structure is making a move up. Retesting that low, decent size wick to the bottom of that candle. I don't know a whole lot about this, but if I'm looking at this on the chart that we have right here, it looks like a lot of the other new assets where I would say if we're back above 29 cents with this, this is just going to continue to kind of smoke upward. But I don't know a whole lot about it, so you have to forgive me for that. XIO. Let's see if XIO is on TradingView. No, I don't see XIO either. Yeah, I don't know. Let's see. XIO here. There we go. And we're going to wrap it up soon, guys. Come on. All right. 52 cents. Market cap 8 million. Wow, that could double easily. Very low trading volume, so I don't know if I could even chart this. Very low trading volume. But it looks like if we're looking at this chart, right? I don't know where you would find this. Markets. Hotbit, don't have any of these. Can't chart on Uniswap really. Maybe I could chart this here. What is this? XIO. Cool, you could chart it here. Good looking trend. Looks like a good looking trend. Higher lows, right? Broke upward from this consolidation. All the way up. It's just signs of strength on the way upward. You know, you want this to continue, obviously. On the way down, it's not like, if we look at this on the daily, we have a pretty extended structure. On the way down, you know, resist support, 34 cents, 26 cents. I don't know if I'd personally want to buy this where it is, but it could be something that's worth just throwing money at. Do I like rap music? Yeah, I like all types of music. And I actually mean that when I say it. Okay, do you think we can retrace 10.3? I think anything's possible. We went over that in the beginning, though. Yeah, I think anything's possible. Play it as it goes, though. So, but I don't know if you're late. I went over that a little bit earlier. Things like MTA, other new alts, the effect on coin supply. Yeah, you know, coin supply is important. Market cap is important. Gives us an idea of how fast these things can move, where they sit in terms of growth. You know, it's easy if market cap's a $5 million market cap, that's something that could double just by people blowing at it, you know? Just by someone sharing it, which is another thing that's kind of dangerous. Oh, awesome, Dave. Swing by on Bitmax, please. Partnered with Ivan on tech. Swap. Okay. Ivan can pump something, so if anything's going to move, someone big like that can make a move. All right, Captain Youth. Later, guys. Later, Captain Youth. Joshua. What's up, man? Joshua. What's up, Josh? I read your name as Joshua. What's up? Oh, Josh, you're right. You're going on your vacation. I thought I was going on mine today, but it's actually tomorrow, so. Yeah, we had a good stream. Glad to have you in. But now get off the computer and hang out with your family. What do you think of DMG? Yeah, Dr. Luke, I don't really know too much of that XIO, so I don't like to get into fundamentals. It's not my area of competence. I'll just go read a synopsis on a website and then just paraphrase it. So what do you think of DMG? And then this will probably wrap it up because we're about an hour. Well, DMG has a very obvious daily support which is good, right? Because in this kind of position, so the problem with this is if we're looking at a daily chart like this, which shows us very clearly that originally this whole area was higher time frame resistance, a little bit more price history in this one than the others. DMG, I don't even know if, is this on TradingView? Maybe it's on a different exchange too. DMG, is that it? I don't know. We'll stick to the Uniswap one because I think everyone's talking about that. DeFi. So higher time frame resistance right here that we blew through, and then now we're treating as support. Very clean setup if you're looking to define your risk for a trade like this, because it's very obvious. Okay, there's my support. You know, I want to be out of this if we lose that level. It's acted as support for the last 3 weeks, right? 2 weeks, excuse me. The problem with Uniswap or these platforms, I don't know enough about all the trading interfaces you could use, but when I've gotten into my Uniswap plays, I've literally blindly bought them by swapping, right? Not really looking at too much of a chart, not caring about precision or price impact. I think I slipped something, maybe 9% at one point. I accepted it. I said, all right, no problem. I slipped it for 9%. I was in the hole 9% for that, and then ended up doubling my money in that position. Not really caring about market impact. The problem with that is, you know, you can't just go, let's see where DMG is. If we can actually access it on an exchange where you can DMM, so DMG, where we can actually place a stop loss, right? So this is actually on it, OKX. Okay, cool. So you could trade this on a regular exchange. So if we go to OKX, I don't think for some reason, every time I type in OKX up there, it doesn't pull it up. So go to OKX and we'll pull up a DMG chart. Then we'll wrap this up. Yeah, hit the likes, guys. Thanks, X Factor. It's so funny to say that sentence. It reminds me of like 2017 and what's his name? Oh, God. Can't think of his name. Shilled every single alt you can imagine. Pseudoman or Supoman. Pseudoman is actually a Freudian slip for what he is. Excuse me, not to say that, even though I just did say that. Okay. Chart. All right. Is this the same asset? Am I looking at the same thing? That's weird. Okay. What do we got? That's weird. I don't know why. Okay, I guess it is, but it was just recently listed. So 110. Yeah, it's the same thing. So yeah, you could place this. The problem is it's so thin, right? 24-hour volume in this is 697,000 DMG, right? So think it's $1.10, so it's roughly that in dollar value. That's really low volume. So if you're trying to get it, so problem is everyone's looking at this as the area to define their risk, right? We all know this is support. This is probably where everyone's stop is. If you get in a position like this and you're saying, I want to long it based on that, you have to really just be like, okay, I'm willing to give up this money, because even if I get out of this trade, by the time that this stop is hit, everyone else's stop is hit, and your stop is executed into an order book that doesn't really exist, right? So you slip down and you're out with a lot less. All of these things, just so we're clear, in my opinion, for me, they're gambles more than anything, with exception for a few. This structure looks good, which is, an indication in and of itself that someone's buying that support. You might not get filled on a pullback with a limit too, so the same ideas apply. It's thin. You're not going to get the same type of clean retests and all these things that happen in more liquid markets. So with this, maybe you get in with a market order and, you place your stop below there, but just understand the risks involved with it. I think that's it though, guys. We're about an hour and something into this. It's time to tackle the rest of the day, whatever that means. Everyone have a fantastic evening, though. I'm happy you guys were able to sign on. As always, guys, on behalf of myself and my partner, Josh Rager, just want to thank you guys for tuning in. Hit the like button, hit subscribe, leave a comment, leave some feedback. We appreciate that. And if you like triggered trailing stops, the only exchange right now that offers them in a whole complete package without needing to make that trade set up with a conditional order is Phemex. So if you go to Phemex.trade, that is our partner. We're not just shilling Phemex. We are actually working directly with the team. We stand behind the exchange in terms of the quality of product they put out. So that's where you can use the trigger trailing stop. Otherwise, you could create it on any conditional order. It's just a little bit more complicated and involves more steps. And anytime you could reduce the amount of steps you take, it just takes a little bit of the friction out of the process, right? That's that, though, guys. Everyone have a fantastic evening, and until next time, thank you for tuning into Blockroots. And now if I could hit the end button in a way that seamlessly ends this, that's that.